Alright guys, welcome to another video, and today we're going to talk about stock exchanges and stock indices. Now these are terms which people usually get wrong all the time. They kind of don't differentiate each of these from the other because they don't really understand the concept. But even experienced investors sometimes, people who don't do this for a living, but people who are still investing, it's been 1 year, they still don't understand it sometimes. So it's important that you differentiate these. Alright, so first we're gonna take a look at stock exchanges, and let's actually go onto the computer and look over here. Alright, so as you can see, stock exchanges are organized marketplaces for the buying and selling of stocks. It seems very simple, right? Organized marketplaces where you can buy and sell stocks or securities. Alright, let me give you some examples and it would be so much easier. Alright, if you are in the US, alright, what are the most common ones? Well, New York Stock Exchange, that comes to mind at first. That is the most common stock exchange. Alright, it used to be called AMSE at first, but it's changed to New York Stock Exchange. Again, there's one more. It's actually not really a stock exchange, but people do like to refer to it, NASDAQ. Okay, and these are the two stock exchanges. Mostly NYSE has all of these stocks apart from the technological stocks which NASDAQ usually has, right? So NASDAQ has all those technological stocks, like you could say tech companies like Google and Facebook and MongoDB and all these things, right? So why stock exchanges? Why do we need stock exchanges although? Alright, now actually let me actually write down for another country. Let's say in case you are from India, in that case you will have two major stock exchanges, BSE being the oldest one in India and has a whole lot of more companies than the other one, which is the NSE, that is the National Stock Exchange. So Bombay Stock Exchange and National Stock Exchange. Of course, NSE is relatively new, I think around 1990s. That's when it really came into the picture. But a lot of people really do favor NSE because it has a lot more volume. And if you do not understand volume, I'll make another video on that. I'm actually making that. I think that's 2 videos after this, so don't worry about this thing. Volume is actually a very big concept. A lot of people don't understand it and they lose a lot of money because of it. So anyway, in that case, if you're a beginner, by the way, you should always prefer something that has more volume. In US, that shouldn't be the issue. In case of India, you should go for NSE mostly if you are a beginner, right? It will serve you much better, right? There would be much more liquidity. You can sell and buy anytime because the volume is much bigger. All right, so why do we need stock exchanges? Well, it's because that these stock exchanges, they don't just provide you with a marketplace. Basically what happens is companies come into the stock exchange, again, they register over there. For instance, let's say that some company like Larsen & Toubro comes to the stock exchange. It asks the stock exchange that, all right, we want to register the stock exchange and we want people to trade the stocks of our company. All right, and they set up the circuit. They basically give the upper limits, lower limits and all that stuff. And if you do not understand that, don't worry about it. They just register their company over there. All right, now of course, for this registration, the stock exchange would charge the company some money. So alright, so the company pays the money to the stock exchange. Alright, that's where it gets some money from. Alright, but again, that's not the only source of money. Of course, all of these stock exchanges, a lot more important function in their working is that they regulate the working of the exchange and regulate the trading or investment that happens in the stock. So they make sure that no kind of cheating is done with the other people, and really, the market is not basically pulled in one direction because of some move that people they just try to do some shady stuff. So these kind of things are avoided by these stock exchanges, and they really regulate the rules and they have everything in place, the circuit limits and all that. So that's something that these guys do. Again, apart from that, how do they earn money? It's again from one more thing. Whenever you buy a stock, whenever you sell a stock, a small percentage of the money is, it's really different for each of these stocks, the stock exchanges. So you're gonna have to check out on that. But depending on your country, just look up your stock exchange that you want to trade in, and then you can get that percentage value. But a very small percentage of money that you buy or sell the stock for, that goes to these stock exchanges. So again, that is another source of income for these people. All right, and they do provide you with a lot of information on their websites. You can actually go and visit, and you can see that a lot of organized information is present over there regarding the companies that they list and regarding the financials. Sometimes depending on the different stock exchanges, you have different kinds of information. Sometimes they even help you learn the about the market. So there's a whole lot of things that you can see. All right, so that is the concept of stock exchanges. And now let's get into the concept of stock indices. All right, now what does it say over here? A stock index or a stock market index is a measurement of a section of the stock market. Now notice the word section of the stock market. All right, so you can have different kinds of stock indices really. Dow Jones Industrial Average, a very popular stock market index, and probably the most popular one in USA. In India, if you want to compare it, then you have the Nifty 50 stock exchange, all right, Nifty or Bank Nifty, or you could have a whole lot of these. Now, each stock exchange sets up these, stock indices, and a lot of these stock indices are really looking at a particular section of the stock market. All right, so for instance, when I talk about Bank Nifty, that looks at all the banks over India. Now, it could be 10 banks, 20 banks, 30 banks, depending on whatever they have said. For instance, Nifty 50 is really the top 50 companies which are performing right now in India. Right, so those top 50 companies would be in Nifty 50, and basically really you would get a weighted average. Let's just read on and you will see a lot more. It is computed from the prices of the selected stocks, typically a weighted average. All right, it is a tool used by investors and financial managers to describe the market and to compare the return on specific investments. Right, so really it's the average of that sector of the market. How is that sector performing? You can get to know using this stock index. All right, for instance, like I said, Nifty 50 lists the top 50 companies, and really, depending on whether those top 50 companies on a net average basis they go up or go down, on the basis of that the stock also swerves up or down. Also, one more thing, however, is that in case you might be wondering, because these 50 companies, are they constant, or what is the criteria? No, again, the Nifty 50 is managed by NSE, by the way, here. So NSE chooses those top 50 companies, and if some companies, let's say, not performing well enough, that company would be removed from those top 50 companies and some other company would replace that previous company. So really you can see that it will always represent the top 50 companies at all time. Right, so depending on it could have a lot of in this case it's 50 companies, but depending on your industrial average, whatever you're looking at, you could have a different one, right? So if you look at some others, really we cannot cover all of them. Like a lot of countries has a lot, and basically for every sector, like I said, Bank Nifty, only the banks. And in case you want to actually look at these stock indices, you can just go onto my website. You can just log in over here, and if you haven't done that, you're actually missing out on a lot of information I'm going to be helping you with, so that you can buy these stocks and sell them at the right time. And you will know that from my experience. I would be helping you start off somewhere. All right, so once you start off, you can actually start doing this on your own. It'll be so easy for you after that. Right, so just take control now, and if you've logged in, you'll be redirected to this page where you have the courses. Right now there's only one course, but you can actually look at the stock chart tool also, which I am here for, because I want to explain this right now. This is the Nifty 50, the Indian index that most people follow really, and you can really just you can even write down any other company name over here or any other index name over here. So like Dow Jones Industrial Average, you can actually look at this as well. Right, so I think these are the futures, but never mind, we're just going to look at this. One sec, I think something's wrong. Dow Jones Industrial. You can actually select index over here, right? So that would only search in the indexes, and you have the index over here, and it will load the index. Of course, this isn't dynamic, but it'll be till yesterday. All of the information will be over here, and you can see the stock market chart, and you can see whatever kind of chart that you want to see. Again, if you do not understand this candlestick chart, it tells a lot more about the graph than really this one, which doesn't really have so much more information. But in case you want to understand this, I'll be making next videos on this, and basically we'll be talking in detail about this. Really, this is a lot more important than you realize right now, but it's really something that we'll cover in the little more advanced section. Let's say, I think it's 2 more videos later, 1 or 2 more videos later. All right, so you can really see how the price is fluctuating, and you can really understand that the market is basically in a specific direction. Like over here, it's so much more bearish. Let's just not use the word bearish. Let's say it's going down. All right, so it's going so much down, so people would say that it's not a good time to actually buy a lot of stocks because it's going down, right? So you don't want to buy at this time because it might go even more down. All right, so and you lose money because if it goes down. So that's the stock index, and that's how it can help you. That's really, it's just an average of the whole thing, right? And these are stock exchanges, of course. Now you can trade stock indexes as well. There are some ways to do that, and I'll teach you, but don't worry about it. In case you have any questions, just hit me up on Instagram and I'll help you with it, of course. And check out this website, man. You're missing out. Most of these videos that I'm doing right now, they will be uploaded over here. Some videos won't be on YouTube, and of course the premium content that I'll be uploading, it won't be on YouTube at all, because I cannot do that over there. I'll be building a community over here, so you can actually just talk about things and you can learn more from each other as well, right? So it's a collective effort. Okay, so anyway, that was all that you needed to know, and let's really talk about some new things in the next video. All right, see you later. Thanks for watching this video.